what's up? My name's Samuel Leeds, and in this video I'm going to be talking once again about capital gains tax. And in this video I'm going to give you the 3 things you can do to pay capital gains tax. Everyone's talking about capital gains tax at the moment because the government are talking about increasing capital gains tax. In fact, they're talking about doubling it. Okay, at the moment it's around about 28%, and they're talking about bringing it up to closer to 40% or beyond. No one knows for sure what's going to happen, but I want to talk about the 3 ways you can avoid paying any capital gains tax. I recently did a video about what I think the government are doing, why I think they're doing it, how they're scaremongering to try and sell more houses and shift more stock right now because there's too many buyers and not enough houses on the market. That's a whole nother story. If you want to check that video out, I'll leave it in the card and also in the description to this video. But right now, these are the 3 ways to pay 0 capital gains tax. First thing you should do though, before you worry about capital gains tax, the most important thing you need to really worry about right now is smashing the like button to this video. Okay, so smash the like button, do me a favor, I put out a new video every single day. Also subscribe, turn the notification bell on. Number 1, if you live in a property and it's your residence and then you sell it, you pay 0 capital gains tax. So capital gains tax, by the way, is a tax that you pay on profit on a property. So you buy a property, it goes up in value, you then sell it. That profit you pay capital gains tax. If you've lived in it, if it's your resident address, you don't pay capital gains tax. So if you're considering the fix and flip strategy, i.e. buying houses to do them up and sell them, it might be worth moving into them, doing them up and selling them, and then the profit you don't pay tax on. How cool is that? That's the first way. There's 2 more ways. Second way to not pay capital gains tax is when you fix the property up and it goes up in value, or if it just goes up in value over time, instead of selling it, remortgage the property. You're going to any equity that you release from the house, because you've got a new mortgage, you're basically borrowing against the house. You're using the equity, the uplift, as collateral to borrow money against that house. But when you refinance it, the money that you take out, you can reinvest into more properties. How much tax are you going to pay on that? None. No tax. Because you can't be taxed on debt. So it's a way of leveraging money, pulling equity and profits out of properties. This is the BRRR strategy. Buy, refurbish, refinance, rent. Then you just leave the house, rent it out, it's giving you a nice income, and you're going to use the equity to put down on another house. What are you going to do? You're going to refurbish it, then you're going to refinance and pull the equity out of that one. And you can recycle your money again and again and again. The third strategy that you can pay 0 capital gains tax is to buy your property and buy it through a company. If you buy it through a limited company and then you sell it, like you probably saw, I did it on YouTube. I've done quite a few fix and flips. I've done the built houses from scratch and sold them and all kinds of different things. If you do that through a company, even if it's not your company, even if it's a part of a joint venture, but if you do it through a company, you won't pay any capital gains tax either. Now you will have to pay tax. You're going to pay corporation tax, but it's way less than capital gains tax. Corporation tax is around about 19%. Might go up a little bit, but it's still considerably less than capital gains tax. So you'll pay no capital gains tax if you live in it. If you buy it through a company and sell it that way, you'll pay corporation tax instead, which is less. Or if you refinance it instead of selling it. I hope you found this video helpful. I am not a tax advisor, by the way. I can only speak from experience. So I would suggest, if you're wanting to save on tax, to get qualified advice from an accountant, because I am not that. What I am is I'm a very successful property investor, but I can only speak from experience. So if you found the video helpful, drop me a like, drop a comment below, and I look forward to seeing you in the next tomorrow, the next video. Do a video every single day. If you want to see the last video I did about why I think that they're increasing capital gains tax, check out this video right here. You'll find that really helpful. Also, don't forget to subscribe over here, and I'll see you next time. Thanks.